Okay, let's get right into the stock market technical analysis. We're going to do a morning analysis just because there's lots of things happening this morning and I didn't get a video out yesterday afternoon. If you guys are following along and you're finding value in the content, drop me a thumbs up. Again, I have been active in that private member group. Yesterday, I was in there all day telling everyone exactly how I thought things were going to play out. I'll point some of that stuff out today in this video. And let's just get right into it. So private member group, link in the description below. And then finally, if you're interested in learning this as a skill set and not just following along with my videos and kind of learning for yourself, take my course. It's about 4 to 5 hours of video trainings talking about, it's all the various topics and concepts of technical analysis, risk management, candlestick analysis, divergence, everything that basically kind of you put it all together for high probability trading and high probability setups. So link in the description below, priced affordable, check that out if you're interested. Guys, SPY. Start out on the SPY. We have, as of right now, that bull trap scenario is fully in effect. And it's starting to kind of play out. I think we're still a little early to really say, to do our victory lap. But at the end of the day, you can see here's your daily chart on the SPY. Resistance, resistance, resistance. There's a couple reactions there. We broke out. Everything looked great. Bulls did their victory dance here. We back tested, nice impulsive rally off that back test. But we have now failed, all right? We're back within that trend line. All right, so right here. And so zoom in, you can see here's the failure. That's essentially your sell signal. That was the breakdown last Friday that I talked about, how I'm now looking for, a decent more downside in the markets. Broke down, they back tested it. And yesterday, if I zoom in, you can really see how they back tested it. They ran it right up into the 200-day moving average right here, and it was rejected, all right? Today, kind of popped up, rejected. Well, that was yesterday, actually. So we failed at the 200-day moving average, and it was so far rejected. Until that's recovered, we are bearish, and we're going to continue to look for more downside. All right, we have a bull trap in effect. I'm looking to take out the lows. I'm really looking for a decent-sized move, probably down to this level, down here at about 338. Now, yeah, the Fed's probably going to step in, but what can they do? They can't pump a bunch of money. At the end of the day, they don't have as much. They don't have as many tools as they used to. They have interest rates. Yes, they could drop interest rates back down, but inflation would run through the roof, so they're likely to not do that. Okay, so just zooming in, I'd expect that there's probably going to be a little bit more of a fight. We're probably going to fight it out here for a little bit, and it's not going to just completely tank. So expect volatility. That's the one thing I'd look for. Probably going to have a lot of spike ups, spike downs. Yesterday we saw that. Let's go to the triple Qs. Triple Qs. The tech's kind of holding in there a little bit better because obviously right now the market's really focused on the financials. But I think this should bleed into tech here probably pretty soon. If I go to the hourly chart, well, actually, we're on a daily here. You can see basically this one has a little more work to do. We're just kind of chopping around a little bit, working our way lower. We are trending lower, but just kind of slowly. So I don't see a whole lot there yet on the hourly. But again, I think that's where the opportunity lies. And then if I look at the hourly chart, you can see they're trying to hold this little trend line right here. Let me grab the right tool. They're trying to make this little hourly trend line where we're holding support. And it looks like they're trying to hold that. So I don't know. Maybe we hold and rally. Maybe we fail. At the end of the day, with the SPY in its position, I'd expect pressure to continue to be put on the other sectors of the market, including tech. All right, so I'm looking for more downside here. If I look at the IWM, this is small caps, very heavy in the regional banks, and obviously that's what's in the headlines right now. Here's the daily chart. Okay, here's your bear trend. Right there, you can see, right, there's your bear market. All right, we broke out. Everything looked great. We break out, back test, ran. I mean, at this point, everybody's extremely bullish. I mean, it looked like a strong breakout and off to the races. But that was, pretty much sold into. And we back tested the trend line, tried to hold it for, we broke down, tried to recover it. We're back down again. So very high volatility. You can see these are big moves. They don't look like a lot, but it's big gaps going on in the market. And It is basically, I mean, these gaps from where we're closing to gapping up, they're about 2% gaps or so. That's pretty large for an indice to be doing that. But we're back below that trend line now, signaling that this is likely a bull trap. Okay, so small caps, I would expect they're going to take out these lows and probably come down. You know, the pre-COVID highs on these were already hit, so I'd expect we're probably heading down to something like 145. You can see really good support down there. Okay, moving on to gold. Gold's continuing to move up. Again, I talked about this weeks ago, how gold and gold miners look like some of my favorite long trades, and they just looked extremely like good bullish setups. At the time, the dollar hadn't really started falling, but at the end of the day, the gold chart looked bullish. We take trades for what the charts show. Now, gold futures, you can see we're spiking up today, but we have some divergence. Here's the gold futures. Again, here's the spike up in the pre-market, basically, rallying into what looks like there's some minor resistance right here. I can see some reactions right through here. There's a gap up right there, a couple reactions. So we ran up into resistance, and we have some negative divergence on the hourly. So I'd expect to pull back to this trend line right here. You can see this trend line. That's what I'd be looking for, is something like that. Probably get a bounce there. We might break the trend line and come back down for some tests of some of these lower support levels. But at the end of the day, buy the dip in gold is what I'm looking to do. So looking for key levels of support to buy. Probably 1880 looks pretty good to me for a level. If we're going to break this upward trend line and we come down to 1880, that looks like a good level of support. So that's what I have in gold. So in general, the miners, they're kind of flat today. Oh, one thing I want to point out, yesterday with the volatility, we'll just point out these NASDAQ futures. Yesterday, and I really want to talk about yesterday, we had this key level of resistance right here at about 12,326. You can see on this, we have lots of little reactions right here. There's another one. There's another one. And sure enough, yesterday, there was the end of the day, really in the last half hour or so, just impulsive rally, pretty strong rally. But at the end of the day, you know, our resistance was right here, and here it is. We rallied right into resistance. I told the private member group, you know, in my post at the end of the day, guys, that end of the day rally was right into resistance. There's no technical change here, even though it felt really impulsive, you know, and that's what those really strong rallies are meant to do, is shake you out of your trade. Didn't seem like it made sense to get out of our short. So your main short, sure enough, woke up this morning and, you know, selling down. Now, a little bit of a rally. You can see we're just kind of battling it out. We're in a little bit of a chop zone. I'm still fully expecting some more downside. Trade idea, ExxonMobil, XOM. Now, we don't have actionable, we don't have a trade trigger yet, but here's the upward trend line on ExxonMobil. Nice support line on the daily chart. As I zoom in, you can see today they gap down pretty much to that trend line, undercut it, but the 200-day moving average is just right below, and that's where the buyers are sitting. So no sell signal. We do have big negative divergence on the daily chart, okay? So from my perspective, I really need to seek, there's just a lot of support right here. You can see I've got the upward trend line, I've got horizontal support, I've got the 200-day, big support sitting right in that area. So at this point, in order for me to justify this as a sell signal, I'd like to see all these support levels get taken out. And that means taking out the 200-day moving average, which is sitting about 101.79. We take that out with a daily close below there. Ideally an impulsive close below there. That should set this up for a sell signal and for a short trade. So nothing there yet, you know, but just want to point it out. Okay, and yesterday in the private group, talked about the VIX and told everyone how I was buying some VIX. Okay, here's the VIX, the volatility index. We pulled back a little bit. I don't see a ton. I mean, there's some support right in here. This is kind of your former reaction high. And you can see we kind of pulled back to that area. The VIX can get kind of whippy, but sure enough, it looked like an area where I thought we'd likely bounce, especially given the nature that the SPY looked like it was basically getting rejected at the 200-day. It was an objective to sprinkle on some VIX trade. So far, this thing's up 13%. And I took the VXX, which is, you can't directly trade the VIX, but this one is an ETF that you can trade, or ETN. It's up about 7.5%. looking for this to, at a minimum, take out the highs, the most recent highs, and probably make a decent sized strong leg up. We'll watch the VIX to be our tell, not this VXX. The VIX would likely need to be where we're going to evaluate this. Going to the daily chart, you can see we kind of have a range up in here. I'd look for the VIX to probably spike up into this range. About 34.57 or so would likely be the area where we'll probably look to pull off some of this VIX trade. JP Morgan, the largest of the financials, sitting at, support is about 129. You can see we've got lots of reactions, right? There's some, there's one, there's a cluster right here, and that's where they're really trying to hold it. So far, that is still holding. Even today, you can see basically hit that 129 and the buyers are sitting there. So a break of that, and I think it will break, to be honest, but a break of that should bring us down to the 200-day moving average, 125.40. You'll likely get a bounce at that 200-day moving average, probably at a minimum back up to the 129, something like that. But then ultimately, probably going to take out the 200-day. So that's the way I kind of see it going, is probably, sell down to the 200, bounce, and then probably chop around for a little bit, and then ultimately give up the 200 and start heading down to some of these lower support levels. There's a big support level on JPM right there at 105. As I roll out, I can see a ton of reactions at that level. So if JPM is going to have another leg down and the market's going to have another leg down, I could easily see us working our way back down to that 105 area. Big support down there. Starbucks coming into support. All right, we got some support right in here at about 197-ish. All right, that's support. The 200's down there, and there's even better support down at this 93.50. So I think that's probably the ultimate target. Just keep an eye on that level. Maybe you get a minor bounce here. I do think we're probably going to come down, hit this 94-ish, and the 200-day are going to come in together. And that would probably be my final target for Starbucks. But yeah, that level is some minor support, about 97-ish. CAT. All right, CAT's breaking down, continuing to break down. Took out this support level at 226, really with the gap down. But I liked it yesterday due to the fact that it pretty much was breaking down. We were down here, we recovered it, but then closed pretty much right there at that key level. So looked like a continuation pattern or some sort of a bear flag. And I think that's going to play out. So again, looking for more downside. If you go to the hourly, the bear flag would kind of be something like this. You draw this out down to, let me grab the right tool, down to here. You flag out, and then you take that and kind of do a continuation like that. And the measured target of that bear flag puts us down in the range of, somewhere in between this 211 down to about 299. There's a gap to fill right there. So I think that gap fill is probably going to be the target on this move. But yeah, looking for more downside there on CAT. Okay, and then finally, NVIDIA, again, the largest of the semiconductors. One of the reasons why I like shorting the semiconductors right now. Again, on NVIDIA, bearish rising wedge, negative divergence on the daily, breakdown, back test, and so far getting rejected. Yesterday was a back test. It was a perfect back test of the trend line. I talked to my private member group. I added to my short position on NVIDIA right there, and so far that's working. We're down 2.5% roughly today, with I think a lot more downside to go. So I don't see any real support on this one until we get down to about 208.50. There's definitely some support there, but I'm looking for more than just that as well. So far so good. I'm gonna wrap it up here, guys. Drop me a thumbs up on your way out. I'll catch you on the next one. Bye.